Hello everyone, a very good evening to all of you. I, Pranjal Arora, on the behalf of Complete Educating Team, welcome you all to our panel discussion on the 56th GST Council meeting. As you all are already aware that the recent GST Council meeting has brought several important recommendations that will influence compliances, ease of doing business, and taxpayer facilitation. Today's discussion is designed to decode these developments and assess their practical impact. We are privileged to have with us an excellent panel of experts from the field of indirect taxation. First of all, I would like to welcome CA Yash. Yes, sir, he's having working experience of over 15 years in the field of indirect taxation with concentration only on GST, service tax, and excise matters. He is currently engaged in handling litigation along with advising clients as well. Next, I would like to give a warm welcome to CA Chirag Mehta, who is the proprietor of Messrs. CB Mehta and Associates, chartered accountant since 2004. Sir has also been contributor of various articles in various professional magazines, including BCAS, Chamber Journal, Bombay Industries Association Tax Journal. He is also a certified accredited GST trainer issued by CBIC through NASEN, an arm of the Government of India Ministry of Finance. And next up, I would like to welcome our moderator, CA Shuchi Sethi, who brings rich experience in handling GST implementation, GST review and due diligence assignments, and GST audits for clients in diverse industries. She is also engaged in evaluating tax positions, providing consultancy services and handling litigation matters of GST before tax and appellate authorities. Together, this panel will help us understand not only how the Council has recommended, but also why it matters to businesses and professionals like us. Over to you, sir and ma'am.
Thank you so much. Thank you to Educating for having us as a panel for the discussion on this niche topic. Thank you for all the members to join here for a rich discussion. As you've rightly pointed out, this will be a panel discussion where I will be playing the role of a moderator, and I'll be laying out the theme of the discussion first, and then I'll pose some questions to learned speakers here who will then address the issues which appear to crop up due to the measures which have been taken, or and also apprise us of the benefits which come out of these changes which have been proposed by the council. Before going into the particular changes at the product level or the service level which have come out, I will put out the purpose with which government apparently has brought such a big reform under GST at the stage we are rightly standing at, where 2017 GST was rolled out in India with the purpose of subsuming a lot of indirect taxes. Then there was a purpose of bringing a unified tax, which was the major purpose to eradicate the cascading effect of taxes, and thus ensuring that somehow all the earlier tax regime tax laws are duly respected. Those rates are not done away with a lot, and the rates are carried forward in the new regime. The provisions or the practices are taken care of, and slowly and gradually a new tax regime having a unified taxation is implemented in India. Because we are all well aware that GST was not an easy reform to bring in India, where cooperative federalism was required. The governments have to come on board on a same page, and then everything else in the industry had to be still evolve with that one taxation, whether it be manufacturing, whether it be sales, whether it be service provision, and so on and so forth. So to lay out the background, when there were earlier laws in picture, government did a research, and it was observed that if GST comes in at that point in time, considering the revenues and the economic situation then that time, 15% tax rate would have been a revenue neutral rate, considering the earlier taxes being subsumed under GST. But At that time, to bring on board all the states on a single policy decision was, of course, not an easy approach. That's why, considering the old rates of excise, VAT, service tax, different tax rates were brought for different products, considering what products are more of raw material nature and what are finished goods, what products face what channels in supply chain, what goes to the consumer, and what should be the rate at that end. Considering that, initially, few rate slabs of 5%, 12%, 18%, 28% were brought. And in fact, as the law evolved, new rates were added. Then some concessional rates were added for some products at the initiation itself to protect the interest of the states, which otherwise would not have agreed because their revenue was being compromised. Compensation cess was promised by the central government to the states. Those decisions were need of that hour, but with the evolution of GST in India, government realized that now some rate rationalization measures need to be done. Has GST been in whatever form and spirit it has had 8 years in the economy, and now economy is in a different position where countries facing global tariff wars with US tariffs increasing exponentially and increasing, hampering the Indian market to supply to US. They're not no more very competitive with the pricing there. And then there are consumption patterns going down in India as well. So government could apprehend that in such situation, considering the global as well as domestic markets, it is a need of the hour to promote the domestic consumption or the domestic sales in India. And for that, consumption had to rise. And to give rise to that consumption, what GST Council or Government of India through indirect tax bodies could do is to rationalize the GST rates on the consumption end goods, where the final consumer finds that the rates of products or services which they procure, it is getting reduced so that they are getting the goods at a cheaper price, so that consumption base increases. This was an agenda with which a group of ministers was formed, and they were giving a responsibility to analyze how can rates be reworked. And now that group of ministers has come up with a proposition before the GST Council, and that GST Council has discussed on 3rd September what rates can be rationalized under GST. On perusal of the press release with a detailed annexure of HSN-wise, product-wise rate changes and a comparison of earlier rate and new rates, along with the sectoral bifurcation of it, it has been observed that the slabs have now been changed from 5, 12, 18, 28 to 5, 18, and 40 majorly. So the rate of 12% and 28% has been done away with. Compensation cess, except on tobacco products, has been done away with again. One additional rate, as I laid out, 40% has been introduced on goods which have been categorized by the bodies as either super luxury or sin goods. So there a new rate has been introduced. These are the broader changes. Now, once we will just touch upon the names of the industries which have seen huge rate changes, and then we'll pose the questions to the speakers. So on the perusal of the document which has been issued by the Press Information Bureau, it is observed that mostly household related goods or goods which reach to the consumer at the end consumer, and not the industrial goods. Household
Shuchi, we can't hear you.
house
Shuchi, we can't hear you.
utility items like kitchenware, table.
Sorry, madam, to interrupt you. I think there's connectivity, low connectivity band. So it's better to
Yeah.
see your video so that the voice will come.
Yeah, Shuchi.
Chirag sir, you can continue with that video. Maybe the problem with Shuchi madam.
I think she's just trying to join again.
Yes, she is back.
Yes.
Sorry for the network issue. Am I audible now?
Yes, Shuchi.
Yes, Shuchi, you're audible.
So we were pinpointing the industries which have seen a rate cut in the products, where we discussed household consumer goods and home appliances have seen a rate cut. Handicrafts has also observed a rate cut from 12 to 15. Automobile sector of both categories which were already there, basis the CC limit, CC of the engine in the vehicle, have seen a rate cut, but that rate cut is not in the basic GST rate, but effectively there's a rate cut if we consider the omission of compensation cess which was there on the vehicles, which has completely been removed now. Insurance, as being highlighted in media, in the health insurance and life insurance has been completely exempted now, which had tax rate of 18% in the existing regime. Pharma products have seen a rate reduction. Besides this, majorly, although the rate rationalization measures have shown that the rates have been reduced either from 12 to 5 or 28 to 12, but few products have also seen a rate increase. Aerated and caffeinated beverages have seen a rate increase. Tobacco products, which government has classified as sin goods, have seen a rate increase. Articles of apparel and footwear have been divided into two baskets, where if the products are priced less than 2,500, they have been classified in the 5% basket. But if they are priced at 2,500 or above, they have been put in the basket at 18% with 18% tax rate. So these are the major areas which have seen a rate reduction or increase. Now, with particular pinpointed observation regarding a rate change, I will pose a question to one of the speakers. So, on perusal of the release, I observed that there was an increase in GST rate on job work services, where the current notification already excludes some kind of specific job work services for specific products. One entry for umbrella has added there, which has a reduced rate, 5%. But residuary job works, which are not for, let's say, textile or printing of newspaper or umbrella, residuary job work, that has been shifted from 12% tax slab to 18% tax slab. A question to you, Yash sir. How do you see this impacting the manufacturing sector?
Thank you, Shuchi. First of all, thank you to Educating for giving me this wonderful opportunity to be a part of panel with Chirag and Shuchi on this interesting topic. Interesting because I think all of us are aware what has happened, the manner in which our Honorable Prime Minister on 15th August said this from the Red Fort, that this is going to be Gen Z GST reforms. That itself created the buzz. And that buzz was there in last 15 days. Then there was so many rumors around it that government will bring the rate change and it will be implemented from the very same day. Then it will be implemented from 1st October. Now we have a date that it will be implemented from 22nd of September. Now, what has happened is, generally what used to happen in case of excise changes, that if in the budget, especially on the 28th of February, if the rate change was being announced, it was implemented from the very same day, 12 a.m. next day. So there was no time actually to speculate or to basically have time to decide what needs to be done and what need not be done. Now, because all of us know that there is a good gap of 15 days, and because these rate changes are humongous in a manner that government itself is admitting that if they put this consumption pattern, we put this consumption pattern in terms of what was the consumption pattern in financial year 23-24, it will be approximately 48,000 crores of revenue implication which is involved. So government itself is admitting it. So when that being the case, obviously the supply chain would reduce, in a sense that activities would reduce for next 15 days, because nobody would want to actually do a transaction at a higher tax rate. In this background, as she pointed out, there are still some changes where the tax rates have increased. Now, if you would look at the tax rate increase on a standalone basis, this will look like a situation that only it's a tax rate increase. But if you look it from a holistic purpose as to what has happened, then probably we'll be able to understand the impact of it in a better manner. So majorly the tax rates of goods have reduced. The tax rates in respect of services have not reduced. In respect of goods also, all those goods which are finished goods, which are consumer goods, which will be actually directly consumed in a B2C market, the tax rate in respect of those goods have reduced. Rightly so, government wants to increase the consumption. Now, once that would happen, obviously in manufacturing all those goods, you would need inward supplies of goods and services. Majorly in respect of services, the rate of taxes have remained same or they have increased, because government wanted to do away with 12 and 28%. Majority services were under 18, then some were under 12. So obviously the only logical explanation was to bring them under 18%. Now, when the job work rate increases from 12 to 18, the problem is that on my inward side, the rate of tax is increased. But majority of my product, the rate of tax on my outward side has reduced. So that means it will lead to a situation where I will have higher credits in my electronic credit ledger. Once I'll have higher credits in my electronic credit ledger, still that is okay because I'll be able to use it. But now because I'll have a lower output tax, I may have a situation where credit accumulation would be there. Now, because credit accumulation would be there, I will try to find ways to liquidate it. But the problem is under inverted duty structure, though government has said in its document, specifically FAQs, that they will give inverted duty refunds in a speedy manner. We have a Supreme Court judgment in case of VKC footsteps, which clearly says you can't claim refund in respect of input services if they are on the inward side. So this 6% job work increase for all those industries which are heavily dependent on job work. There, if the output is already taxable at 18%, there is no problem. But if the output is not taxable at 18%, and now the standard rate of job work increases to 18%, it will lead to a situation of a duty inversion which is not refundable in nature. So barring the industries where there is already a specific rate, like for example, umbrella, printing of newspapers, textiles, jewelry, apart from these, or paper maybe, apart from all other places, job work rate would now be 18% and the output would reduce and it will lead to duty inversion and no refund. So this is going to be one of those implications in respect of job work.
Okay, so similarly, there's one more increase in rate of services which has been observed, which is transportation services by GTA, which were again in the earlier regime being taxed at 12% if the transporter opted for forward charge mechanism. Now, because 12%, as you said, had to be done away with, that has also been shifted to 18%. Will that also cause a huge change in costing of the manufacturers?
Absolutely. There is no doubt about it. Job work may be a case where it may not be applicable for every industry. But transportation is something that cost is sitting in my profit and loss account in each and every industry, even if I'm a trader. So if now my product is taxable at 5%, does not matter. If I'm taking services over GTA and if that GTA is intended to claim credit on the trucks which it has purchased or the spare parts or the tires, then he will charge me 18%. And again, because GTA being a service, if it forms part of my electronic credit ledger, I can't claim a refund of it. So and generally we see that the cost of transportation in a typical product ranges from 5% to 25%, average rate being 7% to 12%. So I'm talking about a cost of approximately 7 to 12%, where there is an increased tax I'm paying on my inward supplies to the extent of 6%. That 6% again on my inward side increase, and a reduction of tax to the extent of almost 7% on my outward side. That together makes an implication of approximately 15 to 20%. So that 15-20% of credit inversion is there, of which I can't claim a refund. So that is going to be the implication. So obviously now people will be tempted to take services of all those who are ready to tell me that I can pay tax under reverse charge. But there in those cases, all those transporters then have to reverse their input tax credit. So that situation would come. So if I want to do business with a large transporter having a large fleet, there'll be a problem. Either he will take a ITC reversal or I will have balance in my electronic credit ledger. If I want to shift to somebody else, a smaller transporter who would actually take vehicles from the market and give it to me under reverse charge, probably that would be an ideal situation for me.
So transportation decisions may have to be relooked upon. There's a rate change in tax rate of coal. Which are the industries which will get impacted by it? Is it hampering manufacturing, or is it hampering consumer in any way also?
Coal is a situation where it was earlier taxable at 5%. Now it will be taxable at 18%. But earlier it was taxable with 5% with compensation cess, 400 per metric ton. Now no compensation cess. So now whatever I'm going to pay on the procurement of coal, generally I will use it for the purpose of my manufacturing activity. All of that becomes creditable. So this rate increase may not hurt me. It will be beneficial for me, because even if if I'll have a duty inversion situation, I'll be able to claim a refund of it. Whereas in case of a compensation cess, if I was an exporter of goods, then only option I had to claim refund of that compensation cess. And also if I was exporting under an automatic route, there was a problem. Somebody had to go to High Court to explain and get an order from the High Court to say I'm entitled to a refund, but at a lower level it was a problem. अब जब 18% टैक्स होगा कोल के ऊपर from 22nd of September without any compensation cess, that rate increase, to my understanding, it may not hurt to that extent जो जॉब वर्क के ऊपर रेट इंक्रीज है और ट्रांसपोर्टेशन के ऊपर रेट इंक्रीज है. नंबर वन. नेगेटिव इम्पैक्ट कोल के ऊपर रेट इंक्रीज का होगा डिस्कॉम कंपनीज को, ऑल दोज हु आर मैन्युफैक्चरिंग इलेक्ट्रिसिटी यूजिंग दैट कोल, because that is not creditable. So now that 5% to 18%, 5% plus compensation says as compared to 18%. I think that 18% will still be on a higher side as compared to 5% plus compensation says. There, because they can't claim the credit, it will be on the negative side. So there it will be made part of the electricity, and probably the electricity prices may go up, maybe by some paisa, but it will have an impact there. So it will have a negative impact on discom companies. But clearly at the manufacturing side, all those who are using coal for manufacturing, it will be a positive change.
Now speaking about the compensation cess, which you have apprised of us of, that it has been removed on coal. It has been removed on automobiles also, the motor vehicles. It has been removed on both kind of motor vehicles, which have been bifurcated on basis of their engine capacity for the tax rates in the earlier taxation structure. So whether removal of this compensation cess coupled with the rate changes gives a benefit in the automobile sector to the consumers, or it is in any way causing a difficulty also to the suppliers or the industry, the OEMs and the dealers, and rather it will hamper their cost structure, and that's why pricing may not see such benefit for the consumers at the end.
So I'll give my small view, then probably Chirag would be able to also add his views to this. What I believe, this is again that one area where government, they have removed compensation says, council has recommended, and from 22nd there will be no compensation says except on the tobacco products. But it will have a problem. The problem being because all the dealers, because the festive season is coming, they will have to stock up their vehicles. So obviously they will have to purchase. They can't wait up till 22nd to actually place orders to buy goods. If they purchase today, they will have to pay compensation says even on the smaller cars. So on the smaller car, large car, whatever it is, they will pay compensation says. Obviously all sales will pick up after 22nd, because everybody knows in the market that now prices of the smaller cars will reduce to the extent of almost 10%, and maybe luxury cars also still there will be a benefit of 3 to 4%, because effective rate of GST will come down to 40% from 43%. 28 plus 15 was the earlier rate, it will come down to 40%. So now I have a situation where my sales will happen after 22nd, but I will purchase today because I have to keep the stock. Otherwise I'll be out of stock. Once I purchase today, all of that will be through, I have to pay compensation cess. It will become part of my electronic credit ledger. But because once I'll sell, obviously there will be no compensation cess. It was asked to the revenue secretary in one of the press interview, in one of the interviews. Revenue secretary said obviously that it will lapse, and the credit would not be available if it is on 22nd. It is lying in electronic credit ledger. What I understand again from my friends who are closely looking into automobile industry, one of the associations, Siam, they met the government officials yesterday and they represented this, that there has to be some way to give refund of this compensation cess. FADA is the other premier agency across India, Federation of Automobile Dealers. They met the revenue secretary today with a representation that you have to figure out something to give this compensation cess. Now the problem is we have a precedence in the service tax and excise regime when there was a levy of excise duty along with there was levy of education cess along with excise duty, and then that education cess was subsumed in excise duty. So all those who had balance of education cess, they went to the High Court and then matter went to the Supreme Court. And they argued before the Supreme Court by saying, give us that benefit. I mean, subsume that, convert that education cess as a set off against excise duty. Ultimately, both of them is going to the central government. Supreme Court, unfortunately, in Cellular Association of India, gave a negative judgment, and they said no, not allowed, because that's not how the structure of the law is. तो आपको एजुकेशन सेस एडजस्ट नहीं हो सकता एक्साइज ड्यूटी में. Unfortunately, same principles according to me applies today. I cannot convert the compensation cess balance into an IGST balance or a CGST or SGST balance. So that's not possible. There is no provision in the Compensation Cess Act or under Section 54 of the CGST Act to claim a refund of that compensation cess. तो जब तक लॉ में कोई चेंज नहीं होगा, अनफॉर्चुनेटली उसका क्रेडिट नहीं मिल सकता, उसका रिफंड नहीं मिल सकता, वो एडजस्ट नहीं हो सकता. जब वो नहीं हो सकता तो इट बिकम्स पार्ट ऑफ ECL. सो अल्टीमेटली अगर वो पढ़ा रहा ECL में, no business will do business at loss. So in a shorter run, probably you will see this burden of compensation cess being passed on by increasing it in the cost of the vehicle. That's what I understand. Chirag, you have something to add?
Yeah, so while we were just preparing for this session, got a call from one of the clients जिसने coal import किया है, ठीक है? And the coal is still on ICs, and it is expected to reach JNPT port by 18th or 19th. Question is, how does he deal with this situation? He will have to pay cess on the import, correct? He can't do anything. So I'll park that one side. Let's take the car example. Is there some other solution to this? Can the dealers possibly issue a credit note, return the cars to the manufacturer, and the manufacturer again invoices those cars back to the dealer after 22nd as a resolution? Because I don't see any other resolution. Yes, but in the long run, they will come out with some refund scheme. But as of now, as Yash pointed out, there is no way out. But Yash, I would like to know your view whether
there is then if somebody has to do a planning, then the better planning is all the dealers buy it on sale or approval basis today.
Sir, can I add to the Chirag sir?
Yes, sir.
Chirag sir, not only the cess, if as you said, if the credit note is issued of taking back stocks, transportation cost is huge cost, which is
correct.
It will be a very big tough task.
So,
and moving back and bringing back the stocks is very tough task, and transportation damages, accidental costs, insurance, lot of costs. Because I'm from Tata Motors Group. 9 years I was with Tata Group. So very huge cost, which is not bearable by the dealer or not the manufacturer. I'm sorry for adding this.
No, what you're saying is absolutely right, sir. I believe probably the alternate way can be that all these OEMs, they send the vehicle on sale on approval basis under a delivery challan to all these dealers and tell them as and when you sell, you send a confirmation to us, and then we'll issue a sale invoice, because that is allowed under Section 31(7).
31 allowed, but 74A will come into picture.
Why 74A? No, it's a legitimate transaction of sale on approval basis.
Here we are intentionally doing to avoid cess.
No. So then obviously, not doing this to avoid cess. I'm saying actually vehicles are being sold on approval. The only problem is what I know, because all these OEMs, they sell it on their factory gate. So risk actually transfers when the vehicle is on the factory gate.
Yes.
Now in this case, the risk will not transfer. So contractually, they may not agree to this. If let's say, because somebody has to ring the bell. So contractually, they may not agree to carry the risk of inventory at the dealer's premises for a period of 6 months. And that can be the hurdle in this case. But if let's say both of them reach to a conclusion by saying that we are ready to carry that risk of insurance or loss or whatever it is, then this can be executed within the four corners of the law. Otherwise, then there is no option available.
And about the coal, which is on ICs, do we have an option of doing a warehousing bill of entry and then clearing it post 22nd?
Bonded warehouse.
So that
You're
could
right,
be
you
a
put
solution.
it in a bonded warehouse and clear it after 22nd.
Yes, Shuchi, you can
Moving
take.
ahead with a different sector completely. So it is observed that the accommodation services in a hotel where the room tariff is below 7,500, there's a rate cut. Chirag sir, I'll pose this question to you. This rate cut has been brought with a condition of no input tax credit. And there's all these hotels are having their restaurants as well, where restaurant services were already being taxed at 5%. The rate on restaurant service was already 5% without ITC. Now, some accommodation service, wherever it crosses the limit of 7,500, will be taxed at a higher rate with ITC, and few of the services of that same entity will be taxable at a rate without ITC. How do you see it getting implemented from the compliance angle from accommodation service providers or hotel service providers?
Yeah. So one major problem is doing away with the ITC. Okay. I think there is one clarification regarding giving the declaration. So the restaurants cannot give the declaration. Only hotels can give the declaration that I want to become a specified premise. Correct. Apart from that, with this ITC going, probably we are at the we are almost half of the financial year. So today I'll have to apply Rule 42. I'll have to select common services, then prorate that over the next period till the end of the year, till March. After March, I'll have to do a true up for the whole year. And that is where I'll have little more loss for these services below 7,500, 5% without ITC. And that's again a compulsion put on them. So that could be a possible loss for this 1 year. Apart from that, I don't see any other major this thing. Yeah. You want to add something, Yash?
Actually, the approach of government in 6 months that has changed. Why? Because in respect of restaurant services, what they were saying, if in previous year, even for a single day, your value of accommodation for a room was more than 7,500, then in current year, you have to pay tax at the rate of 18% on restaurant services. So their government is saying pay full tax, claim complete ITC. Now they are saying if you have any day less than 7,500, 5% without ITC. So on restaurant, government is saying claim ITC, pay full tax. On hotel accommodation, they are saying 50%, less than 7,500 without ITC, more than 7,500 with ITC. This creates a situation where if I do not maintain records of restaurants separately and hotel accommodation separately, my complete ITC will become a common credit. That's point number one. Second, what is happening in the industry is specifically for all these hotels who are working with these travel aggregators, Make My Trip, Go IPO, and all these. What they had started doing is they are saying, okay, if let's say you are having food, let's say breakfast along with hotel accommodation, and the total tariff is let's say 7,400. Then they are saying we'll treat this as under 12%, which now becomes 5%. Whereas what these hotels were doing, they were bifurcating it. They were saying breakfast is 700 rupees separately and room is 6,600 rupees. So they were paying 12% on 6,600 and they were paying 5% without ITC on restaurant. Now the game changes completely. If my one day in the previous year was more than 7,500, and if I'm continuing to follow this practice, now I have to pay on 700 18% with ITC, and around 6,600 5% without ITC. So I can't contradict with my own stand. So what has happened? Everybody has to now they have to flip what they were saying earlier. Now they have to give a separate answer to this. No, I've changed my transaction if they want to be cost effective. So this will create a problem for all the hotels.
Now, moving a little in connection with the industry, we've talked about hotel accommodation. Chirag has clarified that standalone restaurants cannot claim to be a specified premises to take the benefit of 18% with ITC. Now, if we recall, some time back, there was a circular which clarified legal positions of ice cream parlors vis-a-vis restaurants or cloud kitchens. The government clarified that cloud kitchens or any eating joint, restaurant, mess has a different legal position in comparison to ice cream parlors, and all other eating joints and restaurants will be considered as providing restaurant services, being taxable at 5% without ITC, but ice cream parlors will be considered to be supplying goods which will be taxable at 18% GST with ITC. Now that also has seen a rate change where ice creams have been shifted to the 5% slab from 18%. Now, Chirag sir, whether that with ITC, without ITC issue still keeps the issue open whether supply of ice creams is supply of goods or supply of services, or it has neutralized the position.
No, so that goods versus service, as far as ice cream parlors or maybe a cake shop is concerned, that continues. So wherever this ice cream, I'm not talking about ice cream parlors. Let's come to this rate change where there is a manufacturer of ice cream and there is an ice cream parlor. There is no problem. Where it is an ice cream parlor, the manufacturer will charge 5%. He will sell it to the parlor and the parlor will subsequently sell it to the customer. So there is no problem. But now we have a case of two stores. One is a pure ice cream parlor, which is selling ice cream which is ready. Okay, it is buying from the manufacturer and simply either giving it as a retail pack or a scoop. So it is purely sale of goods. But let's take a case of a dessert place or a cafe. So you have number of cafes here in Bombay, there in Jaipur, there. And these cafes have a significant element of preparation. So now coming to that circular 164, which said that where ice cream parlors sell already manufactured ice cream. So I'm talking about a dessert place where the ice cream is prepared or manufactured there. Various elements that go to make the dessert also are manufactured there. Let's say the kulfi or the dry fruit mix or the cake or the cheesecake or the brownie. All this is prepared there. There is a full kitchen. There is the licenses would be at par with a cafe. So we are not, restaurant service should not be read as restaurant. Okay, it applies to, so we cannot read that entry D-horse entry 6B. Entry 6B talk about food services. Wherever there is a composite supply, then it will be deemed to be a service. Now, when you come to the restaurant service definition in that notification, it cannot be read restrictively to mean that, you go to a restaurant to have lunch, dinner or breakfast. It is not that restaurant. It's a restaurant service by way of service. Wherever the food is given by way of service will be covered by that entry in the notification. Now, coming back to the example of a dessert place where these sundaes or milkshakes are served. So there is complete element of service. The licenses are under the FSI Act or under the local authority provisions, the trade license, everything is, at par with a restaurant under the category of food services. If you talk about the FSI license. Now, in this case, this fellow is selling sundaes, which majorly are made of ice creams. He will have to pay 5%, but he will not get credit. He will not get credit of the rent. He will not get credit of the ice cream probably which he is using in the sundae, which would be at 5%, and rent would be a major factor. So yes, if that ice cream is served or prepared at the location where it is served to guests as dine-in facility, it would be 5% without ITC. On the other hand, if that same ice cream is sold at an ice cream parlor, they will attract 5%. Now, coming back to the ice cream industry itself, what will happen is now, as Yash said, that duty inversion will have a very big impact here. to ice cream parlors as well as the person who is manufacturing the ice cream. All inputs will be at 18%. Now, when we talk about the ice cream manufacturer, most of the inputs are zero rated or nil rated. So he's buying milk, fruits, everything. So a major portion of his inputs are at 0% and a small input portion will be taxed. So I don't see a problem as far as the manufacturer of the ice cream is concerned. Now, when that fellow sells it to a franchisee or to a store who is selling ice cream as it is, okay, so we're talking about the ice cream parlor. The major inward supply to him is the cost of the rent. Especially if you go to metro cities like Bombay, Delhi, or cities like Jaipur, the rent will be significant, especially if it is located in a premium locality. There again, as Yash pointed out while answering about inversion, there will be huge accumulation of credit without the facility to claim refund. Because the department will say that your input is at 5, your output is at 5. Now coming to a point that if few of my inputs are at 18, like some packing material or some paper cups, spoons, or some cutlery or whatever, okay, or maybe the scoop cutter, can I then go into inverted duty structure? Okay, we've tried it in few cases. In few cases, department is saying you're purely trading. So how can you claim refund? There is no duty inversion. Our contention was that there are inputs which are at a rate which is higher than the rate at which I'm selling my goods. And even in trading cases, a classic example is the merchant export, where you're exporting the same goods at 0.1 and you're buying them at a higher rate. Still, you're claiming refund, and there's a circular which says that. So that option should be worked out where, and you will still get refund of the service, credit flowing from services. If you apply the formula in 89.5, in cases where even a nominal portion of the inputs are at a higher rate, you can still go and claim a refund. So probably that answers the concern what Yash had raised. So yes, duty inversion in ice cream industry or the bakery industry is going to happen, especially when you come to metro cities where rent contributes to a significant portion of the input credit. Yeah.
Okay.
Yes.
So to take this further, as we understand, because reduction in finished goods or consumer-based goods is causing a duty inversion in almost all cases. Then to address a particular concern where government is only addressing this concern by saying that they'll be providing speedy inverted duty refunds. Now, when every industry of such kind will hold stock because they are providing goods to consumers, so they will have an inventory, and that inventory has costs with higher GST rates, and their output rates are being reduced. So, Yash sir, I'll pose this question to you, whether the 7 days provisional refund under inverted duty will also be a mechanism to help those who are in this intermediate period selling those goods or selling the goods which have been not the intermediate period, just the period just after the effective rates are being applied, whether the goods which have already been procured at a higher rate and they are being sold as is after the rate change or the rate reduction, whether the goods having the same nature, description, HSN and everything, but still having a duty inversion structure due to higher GST rate earlier and reduced rates post these measures, whether this situation can also be dealt with and refund can be taken in these cases, or there's some restriction in law in this concept.
So there is no restriction in the law. In fact, when one reads the law, it says that if my rate of tax on inwards is higher than my rate of tax on output, then I'm entitled to claim a refund under inverted duty structure. That's what section 54(3)(2) says. The problem is by way of a circular. There is circular number 135 dated 31st of March 2020, where in para 3, the exact example which you have mentioned is there, which says if your inward and outward products are same, then and because you bought the goods at a higher GST rate and then selling it at a lower GST rate due to maybe some amendment or concessional rate, then in that case, you can't claim a refund under inverted duty structure. Now, there is no legal backing to this circular. In a sense, the clarification which has been given, there is no legal backing to this. And then there is a Guwahati High Court judgment in case of BMG Informatics, which says that, specifically referring to this circular, that refund in such cases where output and input are same, but due to rate inversion, there is a in inverted duty structure situation is created, then a refund is allowed. So if we go on a legal side of it, yes, refund is allowed, but at a lower level, because the proper officer would be bound by the circular, and till the time the circular is not held ultra vires, they would continue to follow that circular, and that circular is going to be a hurdle. But that should not be an impediment for somebody to not file a refund claim. They should still proceed. If they are unable to actually utilize the complete input tax credit, they should file a refund claim, contest the matter at the appellate stage, considering whatever quantum is involved, and basis that, what the understanding which comes at some point of time, a relief would be given in those cases. But this is not going to be easy. So in fact, what Chirag was also referring to, he is absolutely on the point by saying that as per the provisions, you are entitled to the refund. But they would also, again, in that situation, bring circular 135, and then you have to contest that 135.
The challenge in this regard will go up the ladder you are suggesting.
Yes.
गुड इवनिंग यस सर.
Yes, good evening, sir.
एक क्वेश्चन मेरा है.
हाँ.
इन्होंने जो HSN में बहुत सारे सुधार किए, कुछ 12 को 5 में ले गए, कुछ 18 में ले गए. ईंट भट्टे जो होते हैं, जो मिट्टी के ईंट बनाते हैं और जो फॉरवर्ड चार्ज में 12% है, GST काउंसिल ने उसके बारे में कुछ भी नोटिफाइड नहीं किया.
करेक्ट सर.
तो क्या आज भी उसे माना जाए कि स्पेशल स्कीम में ये 12% में रहेंगे?
नहीं, वो नोटिफिकेशन आने दीजिए सर. वो नोटिफिकेशन में डेफिनेटली 5% में कवर हो जाएगा सर.
बल्कि 5% कैसे हो जाएगा सर, जब उसको स्पेशल कंपोजिशन स्कीम टाइप में जब वो चला करके 6% और विदाउट ITC जब दे रहे हैं, तो जो ITC का लाभ लेगा उसे 5% में कैसे जाने देंगे?
हाँ, पॉइंट वैलिड है. 18% मुझे नहीं लगता वो उस सिचुएशन में जाएगा, बिकॉज अल्टीमेटली पर्पस कंस्ट्रक्शन के अंदर रेट्स को रैशनलाइज करने का था. तो ऐसा लगता तो नहीं है. फिर इन दैट केस उनको कंपोजिशन स्कीम के अंदर भी बदलाव लाने की जरूरत पड़ेगी.
जो उन्होंने स्पेशल कंपोजिशन टाइप की स्कीम है,
बिल्कुल, वो 6% की कंपोजिशन
वो
है.
6% की नो ITC, बाकी वो 12% विद ITC है. उसको GST काउंसिल वाले भूल गए क्या करना है.
नहीं, तो एक और आइटम है. एक पेट्रोलियम एक्सप्लोरेशन के केस में सर्विसेज है, वो भी 12 में है. उसके ऊपर भी प्रेस रिलीज में कुछ नहीं लिखा हुआ है.
जी
बट ये
बिल्कुल.
चीज श्योर है कि जब नोटिफिकेशन आएगा तो उसमें कोई भी 12% का रेट नहीं रहने वाला है सर.
नहीं, ये तो फैक्ट है, लेकिन अगर वो नहीं लाए तो कैसे उसको फिर वो करेंगे?
नहीं तो सर, ये तो प्रेस रिलीज है ना. सिर्फ ऐसा नहीं है कि जो चीज
है डिसीजन
जो प्रेस रिलीज में नहीं है वो नोटिफिकेशन में नहीं आ सकता, ऐसा नहीं है सर. तो आएगा तो सही. हाँ, आपकी बात से मैं सहमत हूँ कि 5% पाने में फिर वो कॉम्पोजिशन में बदलाव करना पड़ेगा. तो लॉजिकली तो ये लगता है, क्योंकि जिस इंटेंशन के साथ अमेंडमेंट आया है, बढ़ना नहीं चाहिए. बट हाँ,
बिल्कुल.
अगर वो 6% का कॉम्पोजिशन है तो पॉसिबिलिटी है कि वो 18 में चला जाए सर.
ठीक सर, थैंक यू.
थैंक्स सर.
I will take this forward. Chirag sir, a question to you, putting out the background in light of which this is being discussed. There's some change which has been proposed in section 15.3 regarding post-supply discounts, where the conditions which were mandatory for output tax liability reduction in respect of these discounts have been proposed to be done away with. And those conditions were that these discounts had to be pre-agreed before the issue of invoice, or before the supply, or before or at the time of supply, so that there's an assurance that it is not a post change in due to maybe non-recovery or something, which is just termed as discount. And there was one more condition, that ITC reversal has to be proved by the supplier. ITC reversal by the recipient has to be proved to the authorities by the supplier to get that output tax liability reduction. Now, what are the amendments in 15.3b, and whether these discount, the reduction on discounts has still been protected, the scope has been widened or it has been reduced?
Yeah. So let's thanks for putting it in context. 15.3b currently says that one, any discount which you give at the time of making the supply, which is popularly known as a trade discount, there is no problem, that remains as it is. Any discount that is reduction in the original value of the transaction, which you are doing post the sale. There could be two situations. One, you agreed in advance that after you reach so much purchase, I will give you further discount. So if there is an agreement, then section 15.3b says that you will be allowed to, the supplier will be allowed to reduce the output tax subject to the recipient reversing the credit which he had earlier taken. Now section 15.3b in its present form, I think did not have this reversal condition. Now what they've done is they've said that now in 15.3b, one, pre-agreed condition is gone. Two, there is one more condition which says linking of the original mother invoice is not required. But there is one more amendment which the press release talks about is 15.3b being amended. So what amendment they're proposing there, that for the purposes of giving this discount, the credit note has to be issued in terms of section 34. When I go to section 34, it prescribes the situations in which a credit note can be issued. And along with that, it also has rule 53, which talks about the contents of a credit note. Now, while they are doing away with the linking of the mother invoices, see, we all know that the credit note under section 34 can be issued only up to 30th November. So forgetting about linking the mother invoice is not an option. So yes, since while in 15.3 the pre-agreed condition is gone, linking to the original invoice is not gone, because they've now said that the reduction which you're proposing in 15.3b, that's the post-sale discount, will be in terms of a credit note issued under section 34. And as per rule 53, which is a prescription for the content of a credit note, GST credit note, yes, still linking it to the original invoice, that condition is not gone. It's just come by way of the prescription under section 34. And I believe they are referring to many other situations which they will come up with clarifications, which they had clarified in terms of circular number 105, which Yash touched upon briefly, which they withdrew later on. You know, they were talking about post-sale discounts and whether the post-sale discount is consideration to an additional activity done by the dealer or no. Then whether the back-to-back discounts would be considered as, like, for example, in the automobile sector, the manufacturer will say that, okay, you give 5,000 per car discount to the customer, I will reimburse that much 5,000 back to you. So on all these points, there was a clarity in terms of that circular 105, but that circular was subsequently withdrawn. Now they plan to again come up with a clarification on all these situations. Yes, as far as this section 15.3b is concerned, the reduction in output, irrespective of whether, let's say that you've provided a service to someone and he comes back and says that, okay, give me some more discount. So under existing provisions, I was not able to reverse the output tax, and I would issue a financial credit note without the tax. Now, with the proposed amendments, I will be able to issue, irrespective of at what point of time I thought about giving the further discount, I can still reduce that price along with the reduction in the output tax. Yes, subject to the condition that recipient reverses the credit, credit. Now, coming to that, they've also said that, so how to, the mechanism for verifying whether the recipient has reversed the credit comes from circular 212. This circular talks about, you know, ledger confirmation and this and that, which now they have proposed to rescind. So as of now, we may think that there is no mechanism to establish that the recipient has reversed the credit. But we all know the IMS was introduced. IMS already, those credit note are forcibly coming in your 2B and you have to accept them. And there's a huge UN cry on that. So I believe because that mechanism is there in IMS, this stopgap arrangement in the circular is done away with.
That condition will still remain for ITC reversal, and the mechanism will be IMS you are suggesting. Okay, so due to the paucity of time, I will just touch base the aspects which are very important for discussion. There's one change which has been proposed in the Act regarding intermediary. So there's a concept of intermediary under GST where the provisions which provide for place of supply in case of transactions where one person is sitting in India and the other one is sitting outside India, or vice versa. In those cases, few supplies have been mentioned under the section to have their place of supply as location of supplier and not the location of recipient. And one of such services is intermediary services. So under section 13(8)(b), there's a clause of intermediary services, and POS for such services has been specified as location of supplier. So to set the context of the transaction, one person is sitting in India and the other person is sitting outside India, and the person sitting outside India is providing some kind of intermediary service for facilitation of supply between two other people, and that supply is not on his own account. Right now, because that person was sitting outside India and he was the supplier, the POS of such service also fell outside India, and that transaction was not taxable under GST. Now, yes, sir, a question to you, whether there'll be a change in the tax position in such kind of transactions.
Yes, Shuchi, there is going to be a change in the tax position, and that change in the tax position would be welcome in all respect, because it was quite a contradiction that I am bringing foreign currency into India. But just because I am not the person who is actually executing the transaction, I am just a facilitator of, let's say, ensuring that an exporter and an importer sitting in two different countries meet, and I work as a facilitator or a sales commission agent. So just because I was sitting in India, the provision said that it will not be treated as export of service. That situation, in spite of bringing foreign currency to India, did not give me any incentive. So now that situation would be taken care of, which would require an amendment in the law. So please make no mistake that this amendment will not come very soon. It will require to be tabled in the parliament, and then it has to go through a due course. President assent would be required, and then notification would be required. So it will take, according to me, good 1 year to actually get implemented. So on the export side of the transaction, now it will be treated as export. This transaction would not be leviable to tax, and if I have any input tax credit, I'll be able to claim a refund of it. But the reverse of this situation would now be taxable, which was earlier not taxable. So if some commission agent or an intermediary is sitting outside India and is giving to a service to an Indian entity, and the Indian entity is making a payment in a foreign currency, then this transaction earlier was not treated as import of service because place of supply was treated as outside India. Now it becomes import of service. The Indian entity making payment in foreign currency would be required to pay tax and a reverse charge at the rate of 18%, but they'll be entitled to claim a credit. And if they are using these services for making an export, they'll be entitled to claim a refund also. So it will not be a cost impacting situation, but it will be a working capital arrangement or a working capital impact which it is going to have. So that ways it would not, because it will not hamper your cost structure. So I don't think it will have a situation where anybody would treat this as negatively, but definitely it will help, in fact, boosting all those people who would be working from India.
So I'll just touch base the last topic due to the paucity of time. If then we can take a Q&A and any other instructions from the platform if I get. From past 1 or 2 years, we have been hearing about the constitution of tribunal, state members taking their seats, and then center members getting appointed. And there are speculations throughout about the dates, which are the final due dates for filing tribunal appeals, because there's a huge backlog of 8 years where matters have been they have been stuck at the appellate level where the negative orders are there. So now tribunal discussion has again been made by the GST Council. So my question is, do we now have a date for or due date for filing of appeals which has to be complied before the honorable tribunal, and what are those due dates?
Yes. So again, GST Council did deliberate upon this. the press release, they did not give a date, but they said before September you'd be able to file appeals before the tribunal. Then they gave one more date. They said all the pending appeals due to non-constitutional tribunal which couldn't be filed, last date would be 30th of June 2026. So that's good handful, 8-10 months that would be given. And they also said that the tribunal will start hearing the matters from the month of December 2025. Except 30th June, all the other two dates are tentative dates. That's what we understand from reading of the press release. However, on the ground, if you would see, what I understand at the majority places, the infrastructure of tribunal is ready. Technical members by CGST have already been appointed. Technical members from SGST in various states are in the process of appointment. Judicial members appointment is pending. So these dates which you see appears to be realistic dates, and there is a possibility that we should be able to start filing our appeals from September 25. The question is whether the tribunal is ready or not. We have to also assess internally whether we are ready or not, because to compile matters of last 8 years to see which were pending at what stage, do we have necessary orders in hand, mandates from client, is going to be an exercise, I think, which will take a lot of time, sir.
Okay.
I think you
With
missed out
this,
one topic of anti-profiteering, if that was also one question.
In
yes,
fact,
yes,
the
it's
chat box, one or two questions are there.
yes. So we can
Yeah, I
also
think that's
touch
an
base
important
upon
topic.
that. Yes. So the to set the context, because all throughout we have been discussing rate reductions. So a question comes that whether the benefit of these rate reductions have to be mandatorily incorporated into the pricing, and whether the cost accumulations or the duty inversion, which you two rightly pointed out, will also be considered and given benefit to pass on the differential benefit only to the consumers, and whether there is any modality to comply with it.
Chirag, you want to answer?
So I'll start and maybe you can add. So we all know that before GST came, anti-profiteering provisions were there in the section, and what we hear out of it has already met its sunset clause. So now with these rate reductions, you may have a brand which is confident of selling even without reducing the final sale price to the customer, the menu price, and still can profiteer that tax amount of 6% into its pocket. 6, or maybe if you take the case of ice creams, it is 13%. But what RS said in the press release, press conference, where he was specifically asked that, how will you handle anti-profiteering? And he said that we will leave it to businesses to, it will take its own course. And we booked only 700 cases of anti-profiteering in these many years. So I don't think we need to waste time on that. Competition will take its course. So I strongly feel that there is no problem. Even if I profiteer out of that reduction rate, there shouldn't be a problem. Yes, you're smiling, so maybe you have something else to say.
No. So what you're saying is actually that comes from the law because there is no authority. So if I look from a consumer perspective, let's say tomorrow I go to an insurance company and tell them that you have not reduced the rate because the insurance premium, no, now there is no GST. So in those cases, there is no authority before whom I can go and lodge an official complaint. Earlier we had NAPA, National Anti-Profiteering Authority. Then we had Competition Commission of India. Then the matters were supposed to be given to GSTAT. Now all three of them do not have power to take a new case from 1st April 2025. So what legally you are saying is right. However, Revenue Secretary said that in the past, we only had some handful number of cases and the total amount of profiteering was approximately 3,000 to 4,000 crores only when GST was brought in. So because of that, they said what we understand that industry has by and large passed on the benefit to the consumers. And because they have done that, we have confidence in the industry and they would follow the ethical practices. Though he did mention that we will still be in close contact with the state and central authorities to see to it the benefits are being passed on. Though this statement suggests that government would keep a watch on it, But government, at least as of now, what it appears, there is no provision through which they can actually get this implemented. However, I think the manner in which again these rate changes have been propagated and the way in which everybody is aware about it, that blunt situation would not come that anybody would say on the face of it that I would not reduce it. So that means if let's say somebody has to take even an aggressive call, it needs to be backed by proper documentation. Because the previous matters of anti-profiteering, what they have suggested is that if let's say I have increased the rate, let's say for this intermediate period of from 4th of September till 21st of September, if I increase my rate and then subsequently I reduce it, and if I'm not able to justify why did I increase the rate during this intermediate period, so there is a judgment in respect of anti-profiting where high courts have taken a view by saying that that rate increase was nothing else but a sham transaction to show that you had actually given the benefit which otherwise you were not given, and they found the person guilty of profiteering due to this tax rate change. Plus, there is different activities need to be done by different people. Manufacturer has to ensure that they pass on the benefit by issuing a credit note if the stock inventory is already pushed. Distributor has to ensure that that credit note is further passed on to the retailer. And retailer has to ensure that the MRP is actually reduced. There is a differential MRP and it specifically mentions that the reduction is due to the change in GST rates. And there are multiple practices around this on which anti-profiteering authorities have taken a view that which practice is allowed, which is not allowed. In fact, anti-profiteering authorities have gone to an extent by saying if there is a reduction in rate and there is a negative impact on your ITC, then ignore the negative impact of ITC and you have to give the benefit of the complete reduction in rate, which to my mind may not be applicable now because there is no provision under which an complaint can be lodged. But yes, considering again that it is there, a reasonable balanced way where reduction in rate vis-a-vis comparison with the loss of ITC, a net of it needs to be passed on. A documentation in this regard needs to be definitely kept so that tomorrow you don't engage yourself with an authority of which you are not comfortable answering to. What I understand in a routine course matter would go to the competition commission and somebody, if they have to, let's say, lodge a complaint, they would do it through competition commission only. But yeah, you are right there by saying that there is no provision as such.
Okay. With this, I think we have touched based all the major reforms which have been announced by the GST Council. We've discussed the rate rationalization and its impact. We've considered the conflict which is coming, the conflict of duty inversion which is coming. We've discussed the policy decisions which businesses should take regarding their pricing and inventory management. With this, I will thank both of you for your expert insights, which was so practical and on ground. And thank you for having this discussion. And that is it from my side.
Thank you
Yeah.
so
There
much.
is one question. Yeah.
Thank you, Ms.
Always
Shuchi.
great to
Shuchi
be a
ma'am,
part
thank
of.
you for moderating the session, keeping it interesting live on 1 hour plus time, and engaging Dhadda sir and Chirag sir and totally and without moving away from the concentration or the question she is going to ask and keeping them concentrating on the subject. I think one Sai Kumar is raised his hand. I think he has one question.
Yeah. And there is one question in the chat box also, sir.
Yeah, please.
Maybe Mr. Sai Kumar, if you would like to ask your question. He's not there. Mr. Gopinath has asked the question, can we increase the MRP now and reduce the MRP on 22nd to show that we have reduced the price? No, that's what I was saying. There is a judgment of, I think, Patanjali by Allahabad High Court that specifically discouraged this practice that you can't do that. So don't do this, sir.
Yeah, Mr. Sai Kumar, you can answer the question. Let us wait. Sir, I myself have one question.
Yes, sir.
Let's take health insurance and life insurance of individuals.
Right, sir.
Which was under 18%, now it has been moved to 0. Nil rate, exempted. So it's only a value addition where the insurance company is to charge as the tax component. Now they are going to
Correct.
they are going to do is they are going to add it to the premium.
Correct.
So what is the benefit the end consumer is going to get? Is that
So we
marginal?
did,
Is that marginal pin?
yeah, that is going to be marginal. We tried doing a calculation in this regard. So what has happened in insurance is because that 18% rate has reduced. Oh, that 18% is not there. Now 1/3 cost is reinsurance, and reinsurance is also exempted now. So if let's say 100% was your premium, so out of that, on that 100, if let's say they had a margin of assuming to be 20, so then on 80, that was the cost. Out of 80, now 1/3 is also exempted, because on 1/3 of reinsurance also the tax is gone.
Yes.
Rest 2/3 which is left, if let's say we assume that on 2/3 average rate of GST was applicable to be, let's say, 15%. So that means that 2/3 will be approximately 53. So on 53 rupees, that will be approximately 15% GST. That comes at around 8 rupees. So if you are paying 118, then 8 rupees still that will be part of it. Still your premium should go down by 10 rupees. So probably now your premium should be around 108 instead of 118. That is a rough calculation on the basis of what would happen now, or what is the impact of this 18% GST going away, sir.
So all the insurances and life insurances has to restructure their premium policy.
Yeah. And I think some of them have already said this in a public statement. I think Max Bhupa said that they will reduce. I was listening to one more gentleman on CNBC. He said that they will reduce. How much they will reduce? They said that we have to assess considering that the loss of credit which is going to be there.
But primarily consumer will be under the impression that earlier I used to pay 18% GST. Now I will not pay the 18% GST. I'm going to pay only 100 rupees as premium. But it will be a surprise when the premium notice comes. It will be not 100 rupees. It will be plus 100 rupees. That
As a consumer, we act very innocent, sir. That's why.
Yes.
There is one more question, sir. Rate
Yeah.
reduction in cement and construction material will benefit builders. Can we expect builders to reduce their property rate sold after or before OC? If it is yeah. So again, the problem is this would not come in anti-profiteering in any case in respect of builders, because if it is a residential project, they can't claim the credit. So it is only the cost of their inward supplies going down, which it is his call whether he wants to pass it on to you or not. Commercial, one can take a view by saying that that can be there, but it's very unlikely, sir. Chirag, you would like to say something?
So yes, as far as cement is concerned, there is a huge 10% delta that is there. So in residential projects, yes, there is a 10% cost reduction because anyways builders were not getting ITC. So we should look at, but it's not going to be some significant reduction. But I think there are many other areas where construction materials, the rates have gone down. So if we add up all those items, then yes, there is a fairly good amount that can be given, but it's not going to be some materially big number.
What is the proportion of cement is going into the construction activity? It will be somewhere around 10 to 15% of the cost, not more than that.
Yes, sir, in any case, in
Of that 8%.
Yeah. In fact, more. I would say more than 20%. That probably I would understand. But the only problem is, even if we have a sunset clause in anti-profiteering, this would not come within the actual definition of anti-profiteering, which is there in 171. So, because all of this is indirect, there is neither increase in ITC nor there is reduction in output tax. This is just a reduction of tax on my inward supplies, on which any which way I was not getting a credit. So that's the problem. So unless somebody says that I would actually follow a clear ethical practice of doing it, that's right. Otherwise, to force this is going to be difficult. That's what I'm trying to say.
I think Mr. Sai Kumar is not there.
He has got his reply. He is confirmed. So there's nothing pending, I guess.
Okay. So hope members, are there any further questions? No questions. Again, I'm thanking Ms. Sashi ma'am for engaging us for the entire 1.5 hour time, 1 hour plus time. and Chirag sir and Dhadda sir were answering very politely and with very interestingly. Kept the entire session active and knowledge transfer has been happened. Thanks a lot for sparing your valuable time. Thanks a lot. Thank you.
Sir,
Thank
we
you.
can't leave without listening to this comment from one politician who said that now even Congress is saying that Gabbar Singh has become good and simple.
What is that, sir? I didn't understand.
So when GST came, opposition said it's a Gabbar Singh tax.
Yes.
Now even that same opposition is saying that Gabbar Singh has become good and simple.
Okay.
It is still far
Thank
from
you
good
very
and
much.
simple. Yeah, thank you. Thank you.
Thank you.
Shall we conclude?
Yes.
Yeah.
Yeah. Thank you. Thanks a lot, sir. Thank you, ma'am.
Thank you.